For my new subscribers, I do videos every single day. I usually do 3. And if you look at the bottom of your screen where it says the description box of the YouTube video, you will see I have a link there titled Today's Playlist. If you click that link, it will bring up all 3 of my videos and they will play one after the other to make life easier for you. Okay, JSnip Forward is here, Tuesday. And I kind of sort of found a very interesting article, and a person they're speaking about has a track record that's pretty good in calling market crashes. I was checking out this thing from Market Watch. Crash Guru warns that the Dow Jones could plunge to around 14,800, and today is a day to watch. That is March 13th. You're going to see this on the 14th. Having said that, it's the end of the day now, and I'm over at my house looking at what the market ended at. Dow Jones was only down 21.5 points. So this is interesting because this particular guy does have a track record, and he's got a cyclical approach. There's an 84-year cycle, he says, that's like now, 2017, 2018. And again, whenever I see that date, 2018, you know what I think of. The Economist magazine cover from 1988 telling you to get ready for a new world currency, probably backed by gold based off of the imagery, in 2018. And then the article inside the magazine went on to talk about the Phoenix dollar. In the world of all these paper currency crises that'll be happening, it might be a good thing to go to. And they just dubbed it the Phoenix dollar or whatever the heck it was. Found somebody's blog who actually covered what was in the magazine, because up until that time I'd only seen the cover. And I wonder if I could find the magazine and buy it myself and go look it up. I wasn't able to, but in the process I found someone's blog who actually did do that. So, let's get on with this. And this guy's name is Sandy Jadea. Chart specialist Sandy Jadea focuses on price, pattern, in time. It's already been a big year for the Dow Industrials, which have stretched a near decade-long bull market to historic heights. But if the technical stars collide, as one chartist is predicting, the blue chip gauge could soon plunge by more than 6,000 points to 14,800. And yes, that's nearly 30% lower based on Friday's close. So let's talk about that for a second. I've been screaming, yelling practically. We are in a bubble, inside of a bubble, inside of a bubble. That's how bad, or how badly, these highs in the markets, stock market that is, actually is. It's insane. It has no business being over 20,000. And you're going to hear him talk about some numbers just over 20,000 where he says it's going to hit this little line in his cyclical chart that he shows you, and I'll show you to you. And in previous times when it hit this little green line, crash occurred later, right after. Shortly after, as a matter of fact. So all I think of is the web bot. Remember? Long time ago, 20,000 Dow would be a key marker point. After that point, we should get a crash in the Dow. But in the later, more recent web bot reports, Cliff, I was talking about Dow Jones 125,000. And maybe I should have emailed him because I was a little confused at first. Because I was like, well, are we going to get a crash and then 125? Or is he saying, in one thing it says crash, but then the other one is saying Dow Jones 125? What I've gathered is that there should be the crash first. And then after whatever the hell it does or however low it goes to, a lot of money, I'm assuming, will pile on. And simultaneously, I think, based off of his report, we'll see dollar problems, as in up, they got to devalue, we got to devalue. Dollar's too strong, let it go down. And when you have a devaluing dollar, other things will go up, like a stock market or what have you, which also includes You guessed it, Bitcoin, gold, silver, etc. So Sanjay Jadea, chief market strategist at Master Trading Strategies, claims several predicted stock market crashes to his name, all of them called days or even weeks in advance. He told CNBC viewers, for example, that the August 2015 flash crash was coming 18 days before it hit. He's also made prescient calls on gold and crude oil. And he's extremely concerned about what this year could bring investors. Now, he's not concerned, he's extremely concerned. Quote, the timeline is rapidly approaching for the next potential Dow Jones as in Dow Jones, meltdown, he said, who shares his techniques via workshops and seminars. Timelines are at the heart of his predictions, which he bases on repeating cycles in the market that are connected to specific times. Quote, people need to look for three things, he says. And he had mentioned this in January. Price, pattern, and time. You can get the price pattern wrong, but if you get in at the right time, the other two don't matter. He sees 2017 as littered with pitfalls for the Dow Jones Industrial Average, which again currently is down by 0.10%, or 0.1% technically. Again, it was 21 points, 21.50 points down. Not a big deal. Below is his so-called timelines chart of the stock index defined by green horizontal lines. He's currently, and I'll show you in a second, he's currently on the outlook for the benchmark to approach the upper green line. So let me zoom in so you can see this better. And see all these green lines from top to bottom, green, 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 green. 1987, it hit the green line, boop, pull back. 2009, well, that's over here, sorry. Remember the tech bubble burst. Now, and I'm not saying all fairness, but take this for whatever it is. 1999, it certainly took a little bit of time, as you see here. This didn't just happen overnight. But boy, did the volatility happen and stay for a while before going back down. Then we have, you know it, 2008, 7, 8, 9. And look at this one. So if we're to gauge the distance from here to here, and then we go from here to here, this looks to me to be about 3 years. Maybe 2001-ish, possibly 2002. So 99, 2000, 2001, 2002. 3, maybe 4 years. This was 3 years, 2007, 8, 9 to the very bottom. So here is where he made his call in 2015, okay? Which we've touched. We've touched this, and we had this so-called flash crash, which got wiped off pretty quick. Let's admit it, right? But then look how high this thing goes, how rapid it goes, and it's on the way to touching this next green line. And as you can see, let me zoom back out now that I'm done with that. Below is the so-called timeline. All right, so he's currently on the lookout for the benchmark to approach that upper green line, which represents a range of, this is Dow Jones, 21,800 to 22,000 if it can touch that line. Okay? He's talking about a pullback to 14,800. That's a big pullback. He says the chart shows how the Dow Jones Industrial Average is edging ever closer to that higher green line in his target range. Once it hits that level, investors need to look for a weekly fall in the index, according to him, and then do something specific. He says, don't just go short. That's where the public gets it all wrong. You have to wait for a break of the low of that weekly bar and put a stop above the high. That was his end quote. And here's the crux of his concerns. If the rally inspired by last year's presidential election continues, the Dow Jones could hit that 22,000 level. But if it fails, in other words, it doesn't quite hit the green bar, we still got problems. The cycle is saying it doesn't matter. We got a problem. The markets are about to go down. Let me make that clear because that's what he said. So he says, if the rally inspired by last year's presidential election continues, the Dow Industrial Average could hit the 22,000 level. But if it fails, the pullback could be steep or even steeper based on historical charts. On one level down would take the Dow Jones Industrial Average to 18,600, while moving 2 full levels lower would bring it to the aforementioned 14,800 level. And he says if the Dow Jones reaches 22,000, then there's a strong opportunity for it to fall back. It's nothing to do with trend lines or channels. These green lines are based on units of time and move forward step by step. As he has done in the past, he offers up specific dates around which he expects potential volatility for market declines. So let's think about this. Excuse me. Potential volatility for market declines. That is not to say potential on this date for a market decline. Let's be clear. Potential volatility on this date for markets to decline. In other words, is anything happening on this date that might mark a spot where markets start going down? Well, funny enough, the Dow was down today. There's huge winning streaks constantly. Dow Jones ended down today, 21 points. Not that that's a huge deal, but is that the potential volatility leading up to whatever crash is about to come? That's what I think he's trying to say here. That's what it says to me. One of those dates, again, the day I'm doing this video, March 13th, Monday. He says, but if it doesn't materialize, he says, watch out for the next date, and it's even more important, and that's May 11th. So we have March, April, and then May. So we got 2 months. May 11th, he's more concerned about the latter date than the former. He says, like a trip to 7-Eleven. He is a frequent subject of media interviews and counts Robert Kiyosaki as a fan. The Rich Dad, Poor Dad author says this guy's charts, back up his own view that markets are going to pull back this year. It is possible that we can take the data and then forecast, is it possible that we can take data and then forecast future turning points? After 31 years in business, it's absolutely yes, he said. If more clarity on the chartist's method is needed, here's another way of explaining how he has managed to get so many correct calls. He suggests visualizing a trip to a 7-Eleven store. You would notice that in the morning, there's a rush around 7 a.m. when people are going to work. Then a lunchtime rush, then late afternoon rush, and then the evening rush. If you look at the data in a 24-hour period, there are 3 or 4 periods where there's an increase of volatility. So when and how did that method pay off for him? Well, on July 31st, 2015, he went on to CNBC and warned of a major volatile move to come between August 7th and 18th, which turned out to be the so-called flash crash of August 24th. He also flagged another period to be careful of, September 13th to September 23rd. Now, that's an interesting date, September 23rd. You remember that one? He went back on CNBC on August 28th, 2015, and told viewers that there would be a drop on September 14th or 17th. A nearly 290-point plunge did hit the Dow Industrials on September 18th. The index proceeded to lose more even ground over several trading days. On October 1st, 2015, and then in November of the same year, he told the network that on January 4th, 2016 would face a bearish mood. According to Business Insider, which has tracked his calls closely over the years, that was the date that the Dow Jones began to tumble, shaving 1,955 points over a small 11-day period of time. I won't forget that because I remember breaking news. The markets have never been this bad on the beginning of any year in recorded history. So again, he said those moves were predicted by looking at repeating cycles. Below is a times window chart of the Dow Industrials that he uses. This chart shows market movements which happen in between those big blue bands, which I'm going to blow up. Let's take a look at that. This chart shows the 9 times the Dow entered that time window and then declined. Moves foreseen by him using his method. So we can all see these blue lines do signify boop, boop, big one, this one had, it looks like this one stayed flat on the move but then went down. And now we're off to the next one. And this one does kind of remind me of this one previously. And this is the Trump rally, November, December, etc. That's what we saw here. And now this is the Trump rally 2.0 hopium smokers that we're going to fix everything in this country all of a sudden, that the debt doesn't matter anymore and everything's cool. So yes, we may in fact be right in line to hit this baby, but this, believe it or not, is only April. Right here's April. And as he said, May is right after this. This is April, and then we have May over here, which is his next timeline, May 11th. But then look at the next blue line. It starts touching into September. You know, the famous September-October time frame? So I wonder what's going to happen there. But this is a 2-year period, 2014, 15, 16, and then, well, actually 3 years, 17. And you can kind of see what it does. But you could make the argument, yeah, but it did it here, went back up. Did it here, went back up. Did it here, went back up. Did it again here, went back up. Stayed flat, a little bit down, went back up. Yes, you could argue that. But at some point, these fake rallies, because that's what they are, fake central bank inspired and started rallies is what you get. Now we're getting on a interest rate increase binge. Right? Today, as you're seeing, this is Tuesday. So then Wednesday is debt ceiling day and also Federal Reserve Day. I think we're going to raise the rates. They're saying now it is 100% probability that the Fed will be raising rates tomorrow. So if they did it in December, 3 months later, another 3 months later, that's what they said they plan on doing. So literally 3 months, 3 months, 3 months, each quarter they plan on raising interest rates. And I remember seeing Donald Trump's video when he was fighting against Hillary in the old campaign trail. And he said, the markets are in a bubble. This isn't a bubble. It's going to pop. It is going to pop. They have no choice. They're going to have to raise the interest rates. And when they raise the interest rates, the bubble is not going to be able to keep going. Something like that. I saw it yesterday. I watched the video because someone else was playing something that tied right into that. And they showed his clip of that. Matter of fact, it might have been another Christopher Green video, AMTV possibly. And anyways, he's now the president. He knows. So, anyways, the 84-year cycle, there's just one more reason why he is so uneasy about this year and into 2018. Stocks are in the midst of a 7-year cycle that only comes around, this particular one, every 84 years, according to this chartist, the chartist. Check out that 84-year chart here on Business Insider. Give me a second, we'll check that out. The current cycle stretches back to 2011 and ends in 2018. And that's why he's more convinced than ever that stocks could be in for a bumpy ride. Quote, the first concern is that every time the market has gone into a blue time window, it has gone down. Now we're in an even bigger time window, the 84-year cycle, he said. My concern is that because we're in that big time window and the Dow is reaching for the upper green line I showed you earlier, and getting close to that blue line, the two things together are like fireworks about to go off, he said. So, when I just showed you a second ago, well, they went up, down, but then went back up higher, down. They went up higher, down. Should we really be concerned? Well, he says yeah, because this is a big 84-year cycle, so all the little mini ones essentially mean nothing. Big ones coming. So, I'm going to pull up this other site, Business Insider, showing this chart, if this page will actually load. Oh, here we go. Click on that. That's him. 1929. Okay. Let's take a peek at this. You're going to want to see this. We are currently in a very dangerous time zone between 2011 and until 2018. This is an 84-year cycle called the time cycle, and the previous cycle appeared during 1928 until 1934. That's funny. What happened between those years? Oh, that's right. The Great Depression. The worst time in history of this country. 1927, 28, 29. Oh, and look at the huge rally in the last couple of years. Oh, markets are great. Yeah, whoa. Down, done. See ya. And then they recovered. But what did they recover to? Nothing like it ever was before. Now take a look at the chart that mirrors that period, 2011 to 2018. And he's saying, and this was, again, this was back in 2016 when they did this particular, it looks like November 2016 up here. So they didn't have the data for 2017. Well, you just got to see the 2017 data, basically, and it's right here. So it's just, happy days, baby. Happy day. Green shoots. So this just serves as a warning / reminder that market is absolutely screaming to the top of its lungs. You all are a bunch of suckers, and I'm about to take you to the cleaners. That's what it's saying. And because it's saying that, I might, how I was talking about, I want to get in on some of that silver First Majestic. Well, you want to see this too. First Majestic stock. Let me let you take a peek. And we look at the 5-day. We do have some volatility here, 70, 90, but Dow Jones ended down today. And we also have this stock going down in that same time period. But, let's look at a 1 month. How about that? If you look at the 1 month, 10, 9, 8, into the 7s, I might be a fool if I did buy some. Like I told you, in 2 weeks, I might go get some of these shares. I think I want to sit back on the sidelines for a little bit, maybe till May 11th-ish. Because if this puppy goes, Dow Jones and all, the whole market goes with it to some extent. And if this freaking stock is at 7 something right now, and I don't want to see it go down for the sake of this company. I like this company a lot. I like Keith Neumeyer. I like what they're doing. Silver mining company that operates in Mexico. Mexico, the largest silver producer in the world. Okay, I love this guy. Love the company. I love silver, of course. But I don't maybe cut myself short if this thing goes down to $1, $2. Having said that, Cliff I seems to think in the next month or two, some kind of jump in silver. I was looking at his Twitter feed. We may see a what the hell moment just happened in silver in a very positive way. And if that happens, you could bet that this stock's going to go up. That's the problem of, again, Magic 8 Ball, it's fake. If it was real, I could just ask the damn thing. Give me an answer, Magic 8 Ball. So maybe I'll do what I said originally. Just get a few, some shares, and then sit back on the sidelines, wait. April, May, how's things looking? Watch it. Okay. Big crash happened. Oh, it's starting to happen. Where's their shares at? Are they going down? If yes, buy some more. If no, they're starting to go up because silver's going up. Go buy some more and finally be done with it. I think that's going to be my strategy. Take care.